Hello everyone, this is Damian coming to you from Belgium once again to bring you a lemonade video. Now today we're going to talk about adjusted EBITDA. Now adjusted EBITDA and EBITDA itself is not everyone's favorite topic. Let's have a listen to Charlie Munger.
Yeah, I think you would understand any presentation using the word EBITDA if every time you saw that word, you just substituted the phrase bullshit earnings.
I knew he'd do it sooner or later, folks.
And of course, Charlie Munger has a point. Adjusted EBITDA and EBITDA itself is basically earnings where a whole bunch of adjustments have been made, right? EBITDA stands for earnings before interest, taxes, depreciation, and amortization. So basically, EBITDA is already adjusted earnings. And then nowadays, people like to talk about adjusted EBITDA. So that's basically adjusted earnings, right? So there's a lot of adjustments one can make. Basically, these are all just financial metrics and you can make up whatever metric you want as long as you define it properly and you don't lie about the numbers. And I would suggest that if you are going to analyze a company like Lemonade, which is spending a lot of money on growth and acquiring customers, then you should really look beyond adjusted EBITDA, because in adjusted EBITDA, the growth spend itself is included, right? The money they are paying to advertise their products. But the benefit of all this growth spend is not really evident in the adjusted EBITDA numbers, right? The customers you acquire, they will start to generate profit down the line as long as they are a customer. And so your expenses show up immediately in adjusted EBITDA, but the profit that arises from those expenses doesn't really show up there straight away. It takes a while, and in Lemonade's case, years to really show up in that number. So all of that being said, I'm not the biggest fan of adjusted EBITDA, but since a lot of people focus on adjusted EBITDA, it's still worth mentioning and worth discussing. And what we're going to do in this video is go back in time and see what Lemonade has disclosed about their adjusted EBITDA projections going back to the first investor day in 2022 and how their wording and timeline for adjusted EBITDA profitability has changed throughout the years and how they are phrasing this in their earnings letters and communications. Okay, so let's have a look at the first investor day, which was in November of 2022. And there they showed this slide, basically showing the evolution of their cash and investments. Now, I'm not a big fan of this slide. I don't think it's all that clear. But what we can see and what I want to focus your attention on here in the middle is that in 2026, right, this bar here is causing a dip in their cash reserves, and in 2027 it starts to increase their cash reserves. So basically what they're saying here is, look, in 2026 our EBITDA will still be negative, right? We will be basically losing money, and in 2027 things will turn around. So around 2026, 2027, that's when we'll see the change happening. And ever since then, they've really held the same timeline. They've always said by the end of 2026, we expect to reach adjusted EBITDA profitability. For example, here we see the shareholder letter of Q3 of 2023. You can see that they're happy to share that we now expect to turn cash flow positive in late 2025. That's not the adjusted free cash flow that they defined more recently. This is just normal cash flow, considerably sooner than they indicated last year, so that would be in 2022. And in this last sentence here, they are stating adjusted EBITDA profitability is now expected to follow in 2026, a few quarters after our cash flow turns positive, which would be in late 2025 by their projections at that point. So a few quarters, well, is that 2, is that 3, is that 4? We don't really know, right? But somewhere in 2026, they expected adjusted EBITDA profitability. Okay, so that was back in 2023 that they made this statement. Let's go a bit forward in time now, and here we are 1 year later. We are in 2024 Q3. Now, what are they saying now? They are saying that they expect a positive net cash flow exiting this year. So, okay, they're talking about net cash flow. If you want to look into those definitions, feel free. There's a whole bunch of different types of cash flow that can be defined. But the adjusted EBITDA profitability was on track for during 2026. So we don't really know when in 2026, beginning, middle, end. They're not clear here, so it could be any time during 2026. That's the statement they made back in Q3 of 2024. Okay, now let's skip forward in time again. And here we are in 2024 Q4 this time. And they say now that we remain on track to exit 2026 generating positive adjusted EBITDA. Right? So basically positive adjusted EBITDA not during 2026, but when they exit 2026. So let's say Q4 of 2026 will have positive adjusted EBITDA. That was the way they phrased it not too long ago in Q4 of 2024. Okay, now what else happened back in Q4 of 2024? We had their second Investor Day. Okay, so here we have the second Investor Day presentation from November of 2024. And here the CFO, Tim Bixby, is showing this graph that shows adjusted EBITDA divided by their gross earned premium. So basically, this graph is below zero as long as adjusted EBITDA is negative, and it flips to positive when adjusted EBITDA flips to positive. And you can see here on this graph that around 2026, 2027, it flips above zero. And now let's have a listen to what Tim has to say about this.
If you look here, you'll see our actual progression since 2021, which is quite something. In broad strokes in 21, this ratio was in the negative 60s. A year later, 50s. Then below 30. This year, likely below 20. And next year, we expect the teens, and by 2026, in the single digits, on its way to positive. Steady as she goes.
Okay, so Tim says that in 2026, this ratio will be in the negative single digits on its way to positive. So once again, that sounds like in 2026, you can expect adjusted EBITDA to still be negative, but on its way to positive. So maybe in Q4, it flips to positive, right?
We can see here, as free cash flow becomes positive for the full year in 2024, followed by EBITDA by year-end 2026, and then followed by net income in the following year.
Okay, so what we are hearing in the way they are phrasing this is that basically at first they said in 2026 you can expect adjusted EBITDA to become positive, and they didn't really say at what time during 2026. Then they shifted it to saying that it's going to be at the end of 2026, so basically Q4 of 2026. Okay, so that was what they said in 2024. Now let's look at 2025. In the Q1 2025 earnings call, CEO Daniel Schreiber said this: "We've been guiding to adjusted EBITDA break-even by year's end 2026 since the very first Investor Day back in 2022. Okay, sounds reasonable. We reiterated that guidance in our 2024 Investor Day. Okay, and we continue to reiterate our expectation to be adjusted EBITDA positive by Q4 of next year, with 2027 being our first full year of positive adjusted EBITDA." Okay, so this is very, very important, right? Basically, all the statements in the past that they've made, which sometimes were hinting at the end of 2026, sometimes during 2026. Okay, Daniel is taking them all together and saying, we've always said the end of 2026. Okay, fine. But what's new information here is that he's saying that 2027 will be the first full year of positive adjusted EBITDA. Now, this is very recent that he said that, right? Q1 of 2025. And I think it won't come true. I think 2026 will be the first full year of positive adjusted EBITDA. And if that's true, well, things are going to be much better than what was predicted in the earnings call of Q1 2025. So why do I think that? Okay, a few reasons. First of all, let's look at what they are actually guiding for the remainder of 2025. So far, we've had 2 quarters, Q1 and Q2, and we have a projection, a guidance for Q3. So let's have a look at what their guidance says. Okay, so here we are in the shareholder letter of Q2 25, and we can see that they are guiding for an adjusted EBITDA loss of around 35.5 million in the third quarter of 2025. But since they're also guiding for the full year 2025, we can actually subtract the results from Q1 and Q2 and this projection for Q3 to arrive at some guidance for Q4. And it turns out that if you do that calculation, you will find that they're actually guiding for an adjusted EBITDA loss in Q4 of 2025 of only 14 million. So the adjusted EBITDA is improving very rapidly. And if they meet their guidance, which we can assume they will because they are never too optimistic with their guidance, that would mean that if they have only a 14 million adjusted EBITDA loss in Q4, I don't think it will take another year to cross the threshold of 0, right? I think it will happen sooner. And there's another reason why I think that. Let's have a look at what's written here, right above this guidance table. They say we reiterate our expectation of positive free cash flow for the full year of 2025, adjusted free cash flow, I should say. And we expect to realize positive adjusted EBITDA before the end of full year 2026. Now, this is very, very strange. At first sight, you might say, well, isn't that what they've always said, right? At the end of 2026, they will reach positive adjusted EBITDA. Yes, but these 2 letters here, these stand out to me. Why would they include these 2 letters, FY? Well, it stands for full year. Now, let's just pretend these letters aren't there, right? Then they would say, okay, we expect to realize positive adjusted EBITDA before the end of 2026. Fine, that's what they've said before. But now they're including these 2 letters, FY, which stands for full year. You see, full year 2025. That's the term they use when they are discussing basically a metric, for example, in-force premium, for an entire year, or adjusted EBITDA for an entire year. So why would they say that they would realize positive adjusted EBITDA before the end of full year 2026, right? Full year doesn't really have an end. It's the full year, right? So this is very, very strange. And to me, this seems like a hint, and maybe they didn't really put it in on purpose, but this could be a hint that they will have positive adjusted EBITDA for full year 2026. Now, I think we can safely assume that at least the first quarter of 2026 will still be an EBITDA loss, but maybe starting from the second quarter or otherwise the third quarter, they will start having positive adjusted EBITDA, so that in total the full year will become positive and the negative adjusted EBITDA from the first quarter in 2026 will be cancelled out. That's how I am interpreting this statement, even though that's not actually what's written there, but I think that's consciously or subconsciously what they are saying here. Okay, now I'm not the only one who noticed this. During the earnings call of this Q2 25 letter, an analyst named Katie Sakis, I hope I'm pronouncing that right, asked the question to Timothy Bixby, the CFO. She said, in reading the shareholder letter, the language on expectations for 2026 seem a little bit different for positive adjusted EBITDA before the end of full year 26. And I think on the last call, you guys had perhaps phrased it as positive EBITDA by Q4 of 26. Is there anything to read into the shift in language here? Okay, so Tim Bixby first says yes, but then he says no, right? He says on the EBITDA break-even, no change. Okay, now I think Katie was right to notice this change in language. So let's see what Tim replies. He says before the end of 2026, we expect EBITDA to be positive. Okay, so that's not a change exactly. We have not indicated that we expect the full quarter to be positive, and I think he means year now, so full year of 2026, although that's certainly possible. Wow. So they have not indicated it, but it's certainly possible. We've indicated no change and expect that before the end of 26. Okay, now, so the most important thing here is that Tim is saying that it's certainly possible that the full year of 2026 will be adjusted EBITDA profitable. And just one quarter earlier, the CEO said that it would be 2027 that would be their first full year of positive adjusted EBITDA. Now the CFO is saying it's certainly possible that the first full year of positive EBITDA will be a year earlier. Now, I think that's very bullish. Now, the next thing I did was I had a look at Paperback Investor's model on Lemonade. He has a very detailed model. You can support him on Patreon to get access to it. And I had a look to see, is this possible? Could it be true that 2026 in total would be positive adjusted EBITDA? And I think it is. I won't go into the numbers here. You can have a look at his model on your own, or maybe he can make a separate video about it. But I definitely thought, okay, this is doable. This is possible. So in summary, I don't think the FY in this earnings letter is meaningless. Just one quarter ago, the CEO said 2027, that will be the first year that we have full year adjusted EBITDA profitability. Well, I think now there's reasons to believe that it will actually be 1 year earlier. Now, of course, this is not financial advice. Draw your own conclusions, but for me, it's a reason to remain bullish, and maybe it could also be an explanation for why the stock price has risen so dramatically after the publication of these results. Because if other people notice this as well, that might be a reason why the stock went up so much, right? Or maybe there's a different reason for the run-up and this hasn't been priced in yet. Who knows? I certainly don't, so make your own decision. Okay, this concludes today's video. If you want to have a look at some other videos about Lemonade that I made, I will include the links in the description. Some are on this channel, others are on the channel of Paperback Investor. I highly recommend watching those and following him, and I will see you next time. Bye.